Hello, you guys, and welcome to Street Smart Investing. I'm your host, Albert, and today I'll be doing a fundamental analysis and a technical analysis. Um, it took me a little while to the technicals, and the technicals that I will be talking about will be on number 46, CODX. So, to start off with the video, I'm offering a disclaimer. I'm not a licensed investor, so if you're going to invest in the stock market, please be advised to a licensed professional because I don't have insurance. I have no liability insurance. So, again, this is not investment advice, just for your knowledge and reference, and more of a guideline for you to understand how the stock market works. So, let's begin. I am doing the advanced medical equipment and technology sector. I have 91 stocks and I number 48, so I'm more than halfway done with this um, evaluation. It's almost past my bedtime, so I'm gonna try to say what I have to say. So, 41, first one up is Ekso, or if you want to call it that, it's EKSO. The dollar amount is $7.81. Market cap is at 61 million. As you can see, I put an X on it right above there. That means I do not like the stock, and for the reasons explaining here in this video. Earnings per share are negative. I don't like it. Not earning anything. PE is at negative 4.58. Debt is at 69%. Too high. Cash flow is at 3.2 million. Pretty decent, but for that stock price, it's awful. That goes again with the amount of shares, but even then, the overall value for this is awful. Next up is number 42, ISRG. They are at a whopping $650. The market cap is at 75, well, close to 76 billion. To be accurate, it is 75.89 billion. As you can see, I check marked it because they're a very good company. Earnings per share is at 11 and 80 cents. PE ratio is at 49.63. As you can see, it's way too high under a normal circumstance. I don't know how low a price range will be to fall in the PE ratio of 15 to 20. So if you cut that in half, even if you cut the share price in half, let's say the what's half of 650 would be 325. I don't know, I'm just guesstimating. Even if the PE ratio was at 25, it'll still be slightly overvalued even at $325. The debt is very, very low, as you can see, 13.8%, very, very low. This company is very expensive, but they are well worth it. Cash flow is positive at $280 million. Just with these numbers alone, I can tell that they are just killing it. They've probably got to be the number one in the rankings for earnings. They've just with the earnings alone, they've got to be probably the best company or one of the at least the top five right away from the advanced medical tech sector. Next up is ANPC at $5.75. Market cap is at 64.41 million. Earnings per share is at negative 125. Don't like that. PE ratios at negative 6.19. Don't like that. Debt is at a whopping 155%. Awful. I could see this company going bankrupt definitely by the end of the year. If not, they're pumping the stock just to keep it afloat, just to keep it alive. But again, the company's awful, not earning anything, and this is what you call a zombie company, where they have awful fundamentals, but technicals, they're just doing good just because they want to keep the share price above $1. They just want to keep the stock alive. Cash flows at 300,000, and that's pretty much all they have going for it. A lot like these other stocks that are just $10 and under. They're just very hard to find good growth companies that are overall evaluation and value, but again, you want a good fair price, but you want to make sure that it's invested the right way, not a zombie company. It's just pretty much inflated and injected through Wall Street and other firms, just to make money. It's not really valuable at all. It's almost like betting on a horse. You don't know if it's gonna finish the race or not. I mean, it's gonna not come in first, but you just don't even know if it's gonna finish the race. So number 44, VAR at 124. No, sorry, $129.41. So $129.41. Market cap is at 11.75 billion. So 11 and a quarter billion. Earnings per share is at 2.56. Pretty good. PE ratio is at 47. Too high, but better than 20. It's doing some work. Debt is at 57. Cash flow is at 21 million. So good numbers. Look pretty good. The price is too high, but I checklisted it and made the watch list. Next up is Vive, 59 cents. This company definitely gonna be delisted unless it goes up within 30 days or something like that. I forgot the rules for it. It's either 30 days or 60 days. It has to be above $1, or else it gets bankrupt and automatically dissolved and delisted, off the market. So 9.3 million. Earnings per share is at negative 39. PE ratio is at 0.01, just pretty much a penny. Awful number. But slightly just making something. Even the earnings per share is awful. So still, the debt is at 41%. Cash flow is at negative 16. So marked at an X, not watch listed. Next up is CODX at $18.45. Market cap is at 506.6 million. Negative earnings at 33 cents. PE ratios at 58.8, close to 59. Negative, actually, negative 59. Debt is really low at 6.4, and the cash flow is at negative $100,000. So I did not watch list it. But real quick, CODX has awful numbers fundamentally, but for some reason, and I'll show you on my computer screen in the back, for some reason on technicals, it looks great. So I mean, it's crazy. It just, like I said, the stock market is not the economy. So this just goes to prove that technicals are working and fundamentals for small cap companies are not even working. So this is what you get in the inflated, casino from the feds. So next up is number 47, SLP at $61.84. Market cap is at $1 billion, 1.1 to be exact, as you can see. Earnings per share is at 50 cents. PE ratio is at 121.7, really, really high. The debt is really, really low at 17%. That's a nice, status. Cash flow is at 2 million. Next up is RMD at $199. These prices are just sky high, but for some reason they're really, really good. I can't really say high prices are quality, but they just seem to do really good. Market cap is at 28.8 billion. Earnings per share is at 3.54. PE ratio is at 54. Debt is at 50%, and cash flow is at 40 million. Thank you guys for watching, and I will explain CODX in terms of technicals. If you like the video, I have more coming up like this, and I'll try to do more technicals and fundamentals moving forward with these videos. So thanks for watching, and if you like it, then like. If you want to subscribe, you can subscribe, or this is where you can find me. I don't have no more social media channels, and this is the only way to find me. Thanks again. See you in the next one.